With me is Ashish Singhal, co-founder and CEO CoinSwitch. Hi, a very warm welcome. And of course, we were talking about how consumers have been affected by the recent 1% TDS on crypto rule. But I want to understand the opinion of an exchange as well. But before we get on to that, I want to check with you what is happening with these exchanges internationally collapsing, these protocols coming to an end. What exactly is happening?
So crypto industry has several business models. Some are inherently riskier than the others, and right execution of these business models can make or break a company. What we are seeing today is that companies who did not have the right execution or promised unsustainable high interest rates have failed to weather the storm. These platforms had to stop redemption, trading, withdrawals of the user funds because their foundation was weak.
Okay. And if I have to understand your foundation or how you function, let's say your business model, how is it different?
So CoinSwitch is built to last. Our foundation is very strong. We provide users with a simple platform to invest in crypto for a small fee. And that's all. That's our business model. We simplify crypto and provide the everyday users with a secure and trustworthy platform to make informed investment decisions. Our users can invest into crypto assets, sell their withholdings anytime. They can withdraw their funds from the CoinSwitch wallet to their registered bank account at any point in time. The entire user journey happens within the KYC-enabled ecosystem, ensuring transparency and compliance with the law of the land. Crypto is stored in a custodial wallets provided by global reputed companies, and the users fully control their investment decisions. Further, we do not offer any lending or do not reinvest users' crypto. Our success lies in offering a robust yet simplified crypto experience. Further, we emphasize on informed investment decisions. We encourage our users to do their research and equip them with educational content through our blog, YouTube channel, and more. We have also introduced, amazing features like Riskometer to alert our users before they buy coins that are considered particularly high volatile.
But Ashish, you use this word, we don't lend. And then, of course, we're seeing these lot of lending platforms also failing. So are you pointing out that lending is a problem? Would you say that or no?
Lending, I wouldn't say it's a problem. Like I said, that it depends on the execution of the business model. Okay. Lending as a business model is inherently a bit riskier, but the right execution is what makes or breaks the company. Since CoinSwitch is not involved in such riskier business models, the risk to our users and our company is not there.
Okay. And since we don't have a regulation here in our country, is there a way to bring some sort of self-regulation, or maybe all the exchanges of India can come together and have, let's say a code of conduct or some self-regulatory terms with which consumers can be protected, and so can the exchanges be?
Definitely, and it is already happening. The crypto industry is not regulated in India, as we know. Therefore, the industry has come together through our industry body called Blockchain and Crypto Asset Council, BACC, to proactively set up self-regulatory mechanism to establish KYC norms and best practices. While we work with the authorities to effect a comprehensive regulation that would protect users and enable responsible businesses, and CoinSwitch is built to be future-proof, right? We follow KYC norms on par with, regulated traditional financial services. And the government has introduced some guidelines and frameworks on the crypto industry in the recent time, including, ASCII guidelines for advertising, including taxation. The next step would be to increase or, to introduce comprehensive regulation to standardize KYC, capital norms, and reporting mechanisms. Regulation will provide clarity and close those loopholes, while through the industry body, we are working on self-regulations and implementing a lot of these self-regulations, but ultimately, it's the government regulation which could bring this clarity to the crypto ecosystem in India.
And we recently had the new tax regime, and 1% TDS on crypto has also come into force. And we've been trying to understand how consumers will be impacted. Now, I've been keen to ask this from you. What has trading been like for an exchange like you after 1% TDS imposition?
I think the 1% TDS has certainly impacted the trading volume across the platforms in India. But the important question here is whether users are trading less frequently or if the trading has moved to the gray market. In India, a platform like CoinSwitch have put in place frameworks to comply with TDS requirement as per the rules. To enhance transparency and aid users with their annual income tax returns, CoinSwitch will provide users with the invoice with a breakup of all deductions, including TDS and fees. Taxation, we understand, is very, very necessary, but excessive taxation could disincentivize users from compliance. Since TDS locks up capital at every trade of the users, some users would try to move to the gray market or exchanges outside India's regulatory purview, right? And there is a misconception as well among the users that trading in the gray market, actually, they don't have to pay any TDS, which is not true. Failing to comply with tax requirement could attract penalties directly to the users. And on the regulatory side, India should incentivize users to stay within the KYC compliant platforms and India's regulatory purview. The purpose of the TDS is to establish a trail of transactions, and a smaller rate of TDS can also achieve that. So a user protection and tax compliance can coexist.
So maybe what you're suggesting is something lesser than 1%. And if there has been a decline, if you can share details of that as well.
Exactly. A lower withholding so that users feel comfortable using the KYC compliant exchanges and do not look out other alternatives or move toward the gray market.
In the end, what would you tell people invested in crypto at the moment? Because definitely these are not the easiest of the times. So what would you tell someone who's invested in the crypto or also is very enthusiastic about the technology?
CoinSwitch primarily caters to the retail investors. And while the market sentiments are bearish across asset classes, this won't be permanent. Markets are cyclical. Further, there are several macroeconomics factors which are causing the downturn, be it high inflation, high interest rates, geopolitical uncertainties in Europe, and the relative shock in the world economy. Once the inflation is under control, macroeconomic situation changes, the market would rebound. And that has happened across multiple cycles across these years. And crypto is building the new internet. Crypto is here to stay. Crypto would continue to evolve, continue to build, and be the force for the good.
Okay, on that positive note, thank you so very much for joining us and answering all our questions.